trading pair that Julian has just posted, because it's really coincidental. I'm also looking at the same one, plus an extra. Now, the way I'm looking at it comes from a little bit of a different angle as compared to Julian. It's more of a, okay, so the purpose of fundamentals from my perspective is to pick the healthiest currency against the weakest currency, right? So I'm just going to go a little bit unconventional here. Let's look at the map of the world. At this very moment, there's a fight happening, right? At this area where my mouse is, between Russia and Ukraine. So if you talk about human personalities, right, what happens in a fight? So if you go out on the streets and you see fights happening, right? If you're a mom, what you're going to do, you're going to pull your child away. If you're a person who is not part of that fight, you're going to move away from it. So I'm coming from a perspective of a very human nature point of view. If there's a fight happening here, who's going to be affected is the people around this area. And of course, not to mention the person who's throwing rocks over at the conflict, right? So countries that are affected right now are the countries making sanctions. They are opening their mouths and say, okay, we are going to do this, we're going to do that. What they're doing, I don't quite care. What I am interested in is how quiet New Zealand and Australia kind of is. All right, which means when people are fighting, what they do, they're just sitting back. Let's not get involved. Let's not make this fight worse. All right, no big bold statement yet, that has splashed the headlines. A little bit more on a quiet, muted side, maybe a wait and see approach. And that's what I'm more interested in, because if I was a hedge fund manager living somewhere in the US, Canada, Russia area, I'll be thinking, oh my gosh, what am I going to do with my client's money? Where am I going to put it? Because I don't know what's going to happen because of this turmoil. I'm going to pick a country that's politically stable, that's relatively further away from the entire fight, and I'm going to try my luck and park it over there. All right, and it's purely on a perspective of safety, safety in terms of safety sentiment, right? People would tend to move towards things that seem a little bit safer, and this is why if I actually did a segment on this on my Fundamentals Sunday, I think a week or two back, I think last week, and I'm going to look at the Euro-Kiwi chart. All right, Euro-Kiwi chart was one of my favorite charts in the 2 weeks of March. Again, as traders, we're just taking a stand on a direction. And the last Sunday, we actually caught, traders with me on the Fundamentals Sundays have already caught this 5 days of move down. And what I do like is, again, Julian did a segment, I think one of the Sundays, and he spoke about, how do we trade through a war, right? How we trade through a war, how we trade through a conflict is be very prepared to make a decision and change a direction. And this is where shorter time frame strategies are really quite powerful here, because what it allow shorter time frame traders to do is to trade the retracement, right? But at the same time, we are very careful while trading the retracement upwards, to be ready for when it's ready to move down again. So last week we spoke about, okay, we have had a huge 5-day week down 2 weeks back, and then last week was a consolidating week in a sense, or retracement week, where buyers might start to come in and test the waters again, because price seems like it's really low right now. Buyers who are very bullish on the euro for some reason might come and try their luck. But ultimately, while the conflict is still going on, I'm pretty much bearish the euro until a bit more positive news comes up. And so looking forward in next week, I'm going to still look at the Euro-Kiwi and see whether we can find any leg room further downwards. All right. Now, again, we are in about the 3rd week of the conflict. It might consolidate a little bit more. It might go down. It might go down. It might go up, but I'm a bit more on the downside. So this is the perspective of the Euro-Kiwi view. Plus, Kiwi has good economic statistics at the moment, so why not? Now, last thing along, I think another quick session along, which I won't really cover in detail now, but very interestingly, this news came out on the Financial Times. They spoke about the Big Four facing a fraud exit from Russia. So there are talks about KPMG, Deloitte, PwC, and EY as Ernst & Young, and they are big auditing, financial services-based companies. And what they are talking about is whether or not they want to pull out of Russia. Now, I don't know whether it's a coincidence, but coincidentally, 4 out of these 4, their headquarters, is in, Deloitte is in London, UK, in terms of headquarters. KPMG is Netherlands. And then, of course, we have London, UK for Ernst & Young is again London, UK. And PwC, PricewaterhouseCoopers is also London, UK. So my question mark is, will this cause a little bit of fear about the pound, right? So next week, I would like to kind of keep an eye on the pound and find whether there are opportunities to short it, because if the big four financial companies are saying we want to pull out of Russia, I think there's uncertainty created there. And if there's uncertainty there, I think there's going to be worries about whether or not, it's financially stable to put your money in that area in that sense, and whether or not people will start pulling out of the pound as well. So my eye is still on a short euro and maybe a little bit of a short pound, seeing as, there's something's happening right there. So just be prepared. I'm just prepared to kind of take the shot if it comes, all right? So again, follow your strategies. Fundamentals is all about using your strategies to find the entries. And with that, I'm going to invite Lloyd, who's going to tell us a little bit more about what's the currencies of the world doing today.